All right. Welcome everyone. Um, I forgot to record the other time. So tonight is going to be about question and answer session on psychology and effective trading. So before we begin, I want to thank Ayodeji, Mr. Ayodeji Amode Adila by we all named by Ayoola Global Exchange, and to my wonderful mentors, Coach Tony and Coach Philip. They have been so amazing to me, very, very helpful. I appreciate them and I celebrate them always, always. Thank you so much, mentors. So tonight is going to be about question and answer. I know a lot of people are still struggling about on trading, and a lot of people are still doing accounts. A lot of people are still funding. So let's talk. Let's talk. What is really, really happening? What is really, really happening? If you can drop a message in the chat box, please do. And if you want to talk, let me know that you want to talk, so I can unmute you. So come up with your questions, fam. Come up with your questions and let's discuss. Let's discuss. Can you guys hear me?
Yes, we can hear you.
All right, so I'm waiting for your questions. We are not looking for markup, so I'm waiting for your questions. Good evening, sir. You're welcome. You're welcome, Mr. Febo, right? Yeah, you're welcome, sir. So does anybody want to talk or you want to drop a question in the chat box? How do you deal with continuous stop loss hits? Yeah, I love that. I don't know if it's Mr. Otuyemi or Mrs. or Miss, I don't know, but welcome. How do you deal with continuous stop loss hits? Well, for every trade, it all have to do with trading probabilities, because no matter how good a trade setup is, in as much we cannot move the market, there is always tendency for your trade to hit stop loss. That's one. In as much we cannot move the market, there's always tendency for the trade to hit a stop loss. So now, how do you now tackle the issue of continuous stop loss hits? This is where you have to sit down and do your risk management plan. You have to plan your trades. And when you are planning your trades, I used to tell people, when you are planning your trades, you have nothing to do with the charts. When you are planning your trade, all you need is a pen and a paper. So if you want to plan your trade, you need to know that, okay, what is my equity? How much do I have? How much do I want to trade with? Then maximum that you should risk is 5% on any amount you have in your trading account. Maximum that you should risk is 5%. But most preferably, I used to tell people risk nothing less than 3 to 1%, 3 to 1% or so. Maximum is 5%. Do not go above 5%, no matter how juicy the setup looks. Do not go above 5%. And also, in this your trading plan, we are snipers traders. And when we are talking about snipers traders, it means that a sniper uses one bullet to kill a target. So the idea of people loading, you should avoid it. at the beginning, avoid it. Use one entry per setup. These are the things that you have to write down. These are like your trading rules. Even before you open your chat, before you open your laptop that you want to look for setup, these are what you have to identify. So now you know that, okay, since trading is in probability, I'm listing maybe like 30% of my accounts. How many times will it take me to blow this my account? How many times will it take me to blow this account? Is it 20 times? Is it 50 times? Is it 10 times? You have to write it down. So if you are not writing down, this is where your trading methodology comes in. What strategy do you want to use? Are you the indicator type of person? Are you the naked chart kind of person? This is where you want to identify it. What is your strategy telling you whenever you want to buy and whenever you want to sell? So for me, as far as I'm concerned, I'm not against any strategy, but I trade smart money concepts. So if you also trade smart money concept, definitely there's no how you are going to take a 10 trade setup with that signature of smart money concept and your trade is going to hit stop loss continuously. It's not possible. You can have straight forward losing trades. There's no problem in that. You can have 5. But the moment your trading starts to get to 7, 8, definitely that means you have not yet mastered that strategy. That's wrong. It means you have not yet mastered that strategy. So you need to position yourself in a way that, okay, I've gained a little bit of knowledge in this in this strategy that I'm using to trade. Do I know what I'm looking for? Do I know where the range is? All the checklists, are they in place? If you are staying consistently on this checklist with this smart money, there is no how you are going to lose like up to 7 trades straight up. It's not possible. It's not possible unless you let your emotions to get the better part of you. Like maybe because the trade hits your stop loss and you now see it going your way, you just enter again, increasing your loss size. That is when you start experiencing all these continuous stop loss hits. But in as much as you have defined everything in your trading plan that no matter how juicy a trade is, I'm not going beyond my risk, maybe 3% of my account. And I discovered something. Some people also do not even know how to calculate their stop loss. So whenever they're just going to a trade, they just put their stop loss somewhere. And when they start seeing the drawdowns, they are like, oh, I don't know it's going to get this big. No, you have to know how to calculate pips. So you have to know that, okay, that's why we always say that narrow what you are trading to few assets, maximum 4, maximum 4, narrow it down. Some people trade just 1, some people trade 2. Narrow it down, understand everything about that asset, how to calculate the stop loss, where to how the trade used to move. I think Boss Amode did that for us some months ago about some assets, how they move and what they play most times. So all these things are what you should understand first before even trading your real accounts. So if all these things are in place, there is no how your stop loss is going to hit continuously like up to 7. And if you are taking a trade of 1 to 3, if you take 10 trades and like 7 is your stop loss, I think even if you still if 3 is your TP, I think you are still good. Or is it 3 or 6? I'm not really sure now. I think 6. So that means you are still good. So this is where you want to start to anticipate your money weight on that strategy. This is where you want to know your edge. So if you can narrow what you are trading down, then I think you won't be experiencing continuous stop loss hits. You won't be experiencing continuous stop loss hits. Please, can you mute yourself? If you're in a noisy place, please mute yourself. So I believe I've answered your question. So you need to do all the paperwork first before going to the charts. So no matter what the chart is now doing, you want to stick with your strategy. And since you know that your strategy has an edge, If you trade in probabilities, you are still going to come out successful. You are still going to come out profitable. So you know that okay, there is no way your trade can hit stop loss like 5 times, but the moment you start hitting stop loss the 7th time, know that something is wrong. Just take a cheap pill, look into it, that what is happening, then you are good to go. You are good to go. I hope I've done justice to your question. All right, you're welcome, fam. You're welcome. All right, next question, please. Next question. The 1 to 3% of the account size, is it daily or per trade? It is per trade, not daily. So if you are taking a trade and your percentage, your risk per percentage is like $5 now, that means all the trade you are going to take, you are risking $5, not daily. That in a day I want to risk $5 or what? No, per that trade, any trade you are taking, you are risking $5. So even if your stop loss gets hit the first time, you are still going with the percentage. You are not going to reduce it, you are not going to increase it, you are still going with it. So risk per trade, not daily. I hope that is clear. You're welcome. How do you prepare your trading journal? This is a nice question. How do you prepare your trading journal? For me, I have two journals. Like I have one that I document on my trading notes, and on Telegram I have my own group, that's my personal group, that each asset I'm trading, I open a group for them where I save my before and after trades. So even when my trade is stop loss, I post it there that this trade has hit stop loss. And when I take profit on a trade, okay, this trade gave me 1 to 3, 1 to 5, or whatever it gives me. Or maybe I've been taken out at break even. So if you want to prepare a trade, you need to know what you are looking for. That's one. After selecting the asset you want to trade, like on the screen now we have plus 300. So now if I want to take journal this trade now on plus 300, then I need to look for my signature. So once I start seeing my signature, then I want to start documenting it down, because this thing will keep on playing over and over again. So you need to, just like as if you are keeping a record. That's why trading is just like every other business. You have to treat it like a business. In as much as you are keeping that record, like on the daily now, you can see that price just created a new higher high and we are seeing retracements, and price is already at your discount level. So you want to put it down that okay, price is at discount level. I'm expecting what? A break in structure if I'm to take a lower time frame
Honorable.
entry. That I'm expecting a break in structure if I want to take an entry on lower time frame. At what area, at your point of interest area, are you looking at an imbalance? Or please mute yourself, please. So, as I was saying, are you looking to play an imbalance, or are you looking to play a mitigation candle, or are you looking to play institutional candle? These are the three candles that I look at for whenever I want to take my entry. Within these three candles on your lower time frame, you are just waiting for a break of structure. So what your trading journal is doing for you is whenever you now see this break of structure on this your lower time frame, you want to pen it down. Okay, I can spot a break of structure on 5 minutes, 15 minutes, 30 minutes. Within it, I can see another mitigation candle that I want to play on, an imbalance that I want to play, or um institutional candle that I want to play. Okay, write it down. And when you're writing this down, you can either take a screenshot or what is it called? You save the chat and link, and you go and paste it on your Telegram group where you have already saved the second journal that you are saving that. So that next time you are seeing that this is what I was looking when I wanted to take this trade. I hope you are with me. This is what you are thinking, and this is what you are seeing, and this is how your thinking process is going whenever you want to take that trade. So you journal it in a way that step by step, how your checklist is aligned, you start writing it down. So immediately you now see where you want to set your limits, then that's when you now take your shot on the MetaTrader 5, or yes, on the MetaTrader 5 or MetaTrader 4. That's when you now take your shot. But before then, whenever you want to journal a trade, always pen it down, especially if you just want to start getting used to it. Always pen it down, always pen it down. That will be very, very, very helpful for you, because now when you are penning it down, you need to start looking at what is the higher time frame telling me. Is the higher time frame, is it in a bullish trend? If daily is in a bullish trend, H4 is in a bullish trend, and you can see that H1 is now retracing, then you want to wait on the lower time frame to continue the directional bias of the H4 and daily, which is buying. Sorry about that. So you now want to wait on the lower time frame, like 30 minutes, 15 minutes, 5 minutes, to continue the directional bias. So all you are waiting for is just another break of structure to tell you that market is about to shift all the way back to being bullish to align with the H4 and the daily. So this will be all your thinking process, and you are going to be writing it down that this is what I'm seeing. This is what makes me take that trade. That is how you get, you have confidence in what you are doing, because now you are not just using only your head. You are not just only thinking about it. You are penning it down for future purpose. For like at the end of the week, okay, you want to look at how many trade did I take? Why did this trade hit stop loss? Why did it go in my direction? You want to see. So if you have all these journals, it's easy for you to go all the way back. But assuming you don't have any journal, you are just taking that trade on your MT5 and MT4. If you want to do your weekly review, you will now have to start to be looking at where is the entry. That's a whole lot of work. But if you start journaling your trade, the moment you start seeing your signature and start following it back to back, then it will be easy for you to know what you are looking for. And as time goes on, you continue to be as good at it. But no matter how good you are, always journal your trades. No matter how good you are. I've seen a lot of people that are really, really good in trading. They are always still journaling their trades. Just like every other business. You can't go to Dangote and tell me that you want to see their business um plan for the for since the year of 2022, and they won't be able to come up with anything. You are going to see how they are going to bring it out for you, how they make decisions, how they have been implementing the decisions they make, every other thing. You are going to see there. It applies to every business, every business. So don't be careless about trading. You also have to journal everything down. So I hope I've answered your question. You're welcome, family. Next question, please. Next question, please. right, Mr. Bolu. All right. You want to speak? You can mute yourself if you want to speak.
Yes, I already asked, but you can't see. I think I already shared.
You what?
I already shared my question on the chat.
Okay. I've seen it. So I would like to share this talking about building assets, being maintaining my rules until I got in this stage of euphoria. Then I needed only to eat stop loss for the rest of my head. I allow myself to be affected by the external factors. Okay, so now you mean after taking your trades and most of the trades get hit stop loss, you get messed up, right?
No, no, that's not what I'm saying. I said I've been maintaining my rules. I make profits, I
Okay,
make losses, normal.
all
But
right.
then I made more profits at a certain point. Then I got this feeling of excitement and
Okay,
loaded, like loaded an asset, only to it SL
okay.
eventually. So it really messed up my head. So I'm asking how you deal with this feeling of excitement.
I love this
Or
question.
you don't get the question.
I said I love this question. I deal with it every week.
Okay.
This
So
is
that is,
why
I want to understand
this
how you deal with
yes,
that feeling.
this is how I deal with it every week. Like I said it some times ago. Trading is just like driving. Just like when you start learning how to drive and you see that okay, you are really getting good at it. There are some times that you just feel like you just want to be putting your leg on the accelerator, you don't want to put your leg on the brake. So and it's just like overspeeding. No how. If you do not hit someone, someone is going to hit you. So the best way to deal with excitement in trading, like the feelings that have arrived, and I know what the market can do, I'm going to know, it's very, very sure for me, is always stick with your risk management. And when I wanted to start sticking with my risk management, I made a decision that I need to start looking at my risk management video twice in a week. So I'm always watching risk management video twice a week. So this thing keeps me thinking that, hey guy, you can't control the market. Even if you are making money, stay with your rules. You understand? It makes me think that you have to stay with your rules. So I'm always watching risk management video. And at the beginning of every week, I watch risk management videos and I watch structure videos. That is me. I watch risk management videos because this is the only thing that's going to keep you long in this business. I've seen people that drew $100 to $10,000 and blew everything. I've seen people like that. You know, you just have to know that in as much you cannot settle within yourself that in as much you cannot move the market, you have to always stick with your trades. You have to always stick with your rules. Do not take much trade like before. Oh, let me mute.
Let your hair grow.
Mr. God's time, can you please mute yourself? All right. So you need to always look at these things that will always keep you in check. Like now, I know that when I started boom and crash, I always load. I always load. If the drop is not coming, I will enter with another lot size, a much bigger lot size. I will just keep on loading, and before you know it, I can't hold on with the drawdown. I close everything. So I started looking at where will my stop loss be, where will it always be, how much am I risking, and if it hits, it hits. Even if it just hit my stop line and the trade starts going my way, I'm going to wait for another trade sell. I'm not going to chase it. That is how I overcame it. So always watch risk management videos That's just the best decision, best answer for me. Always watch risk management videos. This will always, and when you watch these videos, meditate on it, visualize it how you want to be taking your trade in line with the risk management. You have to visualize it. That's why you have to. There are sometimes I just have to take some breaks from trading and just sit down and think and visualize things how you want them to be. These are the things that are going to help you even before you start trading. Even before you start trading, these are the things that are going to help you. So I hope I've answered your question, Mr. Boluwatife. All right, so just watch risk management videos. Okay, for like a $50 account, what item is going to look out for it? Just to build an account. Okay, Mr. TAA or Mrs. TAA or Miss. For like a $50 account, what higher time frame is better to look out for points of interest to build an account? Just start from the monthly, weekly, and daily. What do you trade? What is it called? Do you trade synthetics or you trade forex? Mr. TAA, do you trade synthetics or forex? Okay, if it's synthetics, please start from monthly time frame. Monthly time frame, weekly time frame, and daily time frame. Master these 3 time frames, because one thing my mentor and I we've come to understand about synthetic is that they are like a one-way traffic. If you look at some assets since inception, they have been buying, and if you look at some assets since inception, they have been selling. So now you want to position yourself with the higher time frame. What is the higher time frame doing? Like B3 now, B3 has been selling. In fact, like last week, I tried taking some buys because I believe that okay, if market creates a new low, market should create a new lower high. But then they didn't give us that deeper retracement to do us that. So I just it's better to stay on that side of a sell. That is for B3, for instance, now. So you need to look at what is the monthly telling you. Is the monthly, did you just create a new lower low? And can you see a break of straw to tell you that retracement is about to start? If you are trying to take that kind of retracement, where are you looking to take your profit first? Your first profit should be your 1 to 3. Then, if you are thinking of closing, breaking even or adjusting your stop loss, then you have to start forecasting that okay, is there any imbalance above anywhere starting from the 50%? That's the equilibrium level of the last swing point. You need to start visualizing that okay, this place the market can continue in its trend. And if you know that it's very, very okay for you, because to trade a retracement trades requires some level of mental stability. You need to try and be on the side of the trend. So you are looking at the higher time frame that am I seeing any imbalance, any institutional candle or mitigation candle on the higher time frame, such as the monthly, the weekly, and the daily. If you can spot all these, then you can now say, okay, you want to start going to the 15 minutes, 30 minutes, 1 hour for your entries. With this, you can grow your account. With this, you can grow your account. Okay, Mr. Gospel, at what point do you think one should consider changing his or our trading strategy? All right, all right. For me, I can't really say that this is at the point that you should try to change your strategy. This is the reason. I think I paid for Sai Jimmy's mentorship group. That's the ATM Plus. I paid for Boom and Crash mentorship group, Mr. Eisen. I paid for STL group and like that. But the reason why I'm more focused on trading smart money is because I've seen a lot of people in this field that they are like a living testimony to me that this strategy works. Before the likes of Boss Philip joined STF, I've known him for like since the days of ATM Plus. So I know the level of changes that has occurred in his trading career. Shey you get? So I know that okay, these things really works. So if it's not working, then it should be the first should be from me. That is one. I know the story of how Coach Tony also started. I know the story of how Tony started. So if this thing is working for these guys, then it should also work for me. The likes of Rockers, and even when Rockers was complaining in during the days of ATM Plus, I know then you get. So the way all these guys just change all of a sudden, it's not like they didn't see something they were trading with this strategy. That means they master something. So it is not that mastering that is not led for me to gain understanding in. If you now see that okay, you give your time, like for me, if you want to give your time when it comes to forex trading, I will tell you a minimum of 1 year before you can make another decision that okay, this strategy is not working for me. A minimum of 1 year, because there are some patterns, there are some things that in a year you might not see them more than like 3 times. Believe me, you might not see them more than like 3 times. So you want to like stick with them with the strategy and dedicate yourself to it. You just want to be slave to that strategy. You want to follow it accordingly, religiously. If you can do this for straight 1 year, you now start to like see that okay, how is my win rate? If you now see that it's not working, then you now want to try other things. In my group now, there are so many times that people have introduced me to ICT. I'm still okay with smart money. It's not as if I cannot study ICT, but I'm not interested because one, I still have something that is working for me that is still brings money for me. So I'm not interested in, except if I just want to learn it for learning sake. But for now, it's not part of my plan. Shey you get? It's not part of my plan. I have what I plan that I want to achieve within some certain durations of time. So ICT is not part of it. So I'm focused on achieving those plans. So I won't say because I've seen another opportunity, I want to jump at it. That's one of the mistakes that most of us make. You won't get mastery in one strategy, and when we just see someone just post something else, we are just like running off to that side that okay, teach me what is it all about, so thing and so thing. For you to say that you want to like try a new strategy, if you are game mastering what you are trading, right? In your strategy, then you should know that you are getting to a certain level of to a certain level. So with that, then you know that okay, you cannot learn new things. But in as much as you have not gained mastery, I see no reason for someone to say I want to learn something else. I see no reason. Just like a primary one student that feel like I'm not yet good at this primary one level. I see no reason why you should be promoted to primary two, because you are doing more damage than good. So you know that you have to stay with what you are doing. You have to focus 100%, give it all you have. Just do it as if is all you have is just plan A. There's no plan B, there's no plan C. All you have is plan A. There's no retreat, there's no giving up. I hope I answered your questions. Okay, what of the case whereby whenever I apply smart money trading skills on demo accounts, it works for me perfectly, but whenever I switch, I see myself trading rubbish. Okay. Um, the thing is, in as much as you can trade demo successfully, the same way is how you should trade your real account. So if you are not getting a different kind of result on your real account, it means that you are adapting a bad habit on your demo account. For instance, if you are not consistent with your lot size on your demo account, you feel like because you have this demo account that like $10,000 account, and you feel like you can just open a number, quite a number of lot size. But when you now go on your real account, you are opening another lot size. This is what it does to you. If you are opening a big lot size on your demo, whenever you are seeing this drawdown, you are not bothered. That's one. Two, whenever you are seeing this profit, is doing more harm to you, because even if you see that profit, if you make that same entry on your real account, that profit difference is going to affect your psychology, because you are making, with the same entry, you are making $1,000 on your demo and you are making like $15 on your real account. It's going to affect you. There is no how. That's why you have to treat your demo as if you are trading your real account. So I see no reason why you should be trading your demo account, making money, and when you come to your real account and you are making loss. It's not possible. The only thing that is different between real account and demo account is your emotions. The chart is the same, the strategy you are using is the same. So if your trading plan is also the same, I see no reason why you shouldn't make money. But if you allow your emotion to get the better part of you, that is where you start having issues. So that is where I will say that you need to focus more on how you trade on your demo account than how you trade on your real account. So in as much as you can make money on your demo account, you should be able to also make money on your real account. So boss, how can one deal with trading psychology and emotions? Okay, Mr. Godwin, if you want to make um how to deal with your trading psychology and emotions, the best way to deal with your trading psychology and emotion is just eliminate your emotions out of it. Don't think with your emotions. Don't act with your emotions. Do you understand me? Don't act with your emotions. Whenever you are trading, you need to look at, okay, am I in the right frame of mind to trade? Like something happened on Monday, I was somewhere on Monday, and even though I already had some chart markups on Sunday, I didn't take those trades because one, I was not with my laptop. Two, I was not in a conducive environment for me to settle down, for me to be able to think right, to be in the right frame of mind. So I was not interested in taking any trades. So in this way, and again, I noticed that I could not monitor trades. I cannot be checking my phone and on my system to like, okay, like is it every 4 hours that I want to know what is it that is happening in the market. I know that I was going to be quite busy on Monday, so I just shut everything down. I didn't take any single trade, and in fact, I've not even taken any trade this week. I've been running on the trade that I've taken since last week. So you need to understand that, okay, am I okay in trading? Am I not having any emotions trouble, maybe with some other things? If you are involved in any other things that is like not making your mind to be in one place, just stay off trading. Are you not okay health-wise? Maybe you are feeling sick or you have a running stomach or something. Just stay off trading. Also, if you have bills that you want to pay, bills, the best things to do is to stay off trading because you are going to overtrade. If you are looking for money, trade is not where you get it. In terms of maybe there's a pressing issues, trade is not where you get it. Because one, you are not going to follow all your risk management to apparatus. You are not going to follow it. Your trade won't align to the fullest, like your checklist, and you're just going to feel like, I've seen this thing so many times. I want to just enter, I want to make money, I need to do this thing fast, 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 fast. You shouldn't be trading. So you need to understand that for you to trade, it is business. You have to be in the right frame of mind. So I hope I've answered your question, Mr. Godwin. Okay, Mr. Dekule, even apply a proper risk management and you are still experiencing different kind of results from your demo and your real accounts, maybe you should chat me up after the call because then it's more than just just your trading strategy and the rest. You need to look into it. Okay, I've been changing strategy before now, but several of them have different ways of fee structure. I've done the phase one on STF and now you phase two, but I feel like I'm not good enough with structure and other flow. Okay, now if one of my advice for you is Mr. Godwin, watch um since you're an STF, go and watch what's it called? Coach Tony's Bitcoin trades on YouTube. Pay attention to only structure. This time around, we are not interested in how it takes the entry. We are not interested in the range. We are not interested in the institutional candles or mitigation candles or any balance. We are only interested in what? In structure. So now let this be in your, settle this within yourself that if Coach Tony can see structure in this way and is making money consistently, then let me just trust him. Now you're not trusting the strategy, you are trusting Coach Tony that this is how he sees that structure. So I want to trust him because it's just like if someone recommends someone to you that you don't know and you want to do business. It's not as if you trust that person immediately, but because of the person that recommended that person to you, that is why you're going to that business. So you are trusting Coach Tony, not trusting what the chat or whatever is telling you. So now, how Coach Tony is now doing that structure is what you want to adapt to. So you can stay on it for like minimum of 1 week. Watch those videos. The only thing you are focusing on is structure. Watch it back to back. I'm sure you're going to get something out of it. You're going to get something out of it. About order flow. Just order flow, you have to understand higher time frame buyers, where the market is going and where the market is coming from. What is the market attracted to? Is it imbalance that is driving the market? Is it liquidity? All these things are what you should settle within yourself that, okay, I want to look at the higher time frame. Market is buying. If market is buying, then where possible is market looking to get to? Is it looking to take out a equal highs? Is it looking to take out to fill an imbalance? Is it looking to tap into institutional candles? This is how you start doing order flow. This is how you start knowing how to position yourself. All right. How do you learn to hold trades? How do you learn to hold long trades? I tend to look at trades every time, having this feeling of anxiety not to close trades too early. Okay, Mr. Tega, the idea of holding trades for a very long time is not a bad idea. That means you want to start thinking like an investor, and it's really a really good thing, a good thing. But my number one rule whenever I'm taking a trade is take your first profit at 1 to 3 always. Every other thing is just like bonus. So now, even if you are looking at maybe market is in a bullish trend and you are looking to take a market for a buy, and now you see the market is retracing, you now want to take it to a new higher high. Don't be too um don't be as like someone that feel like it must create a new higher high or capture the previous high before I can take profits. In as much as you can get your 1 to 3 even before it gets there, secure some profits first. So every other thing that comes with it is knowing the bias of the higher time frame. Let's take B5 for example. For some months now, B5 on the weekly time frame has been giving us some good move to the downside. So now you know that your first TP is not to capture the previous week lower low. It is to get your 1 to 3 first. Then you are eyeing to get to that previous lower low to create a new lower low. That is how you start thinking of long term. So I hope I've answered your question, Mr. Tega. But if you are Mr. Tega, if you are trading what's it called, a small account, you should be more focused on compounding first than holding trades. You should more focus on compounding your trades, your accounts. Because if you feel like you want to hold trades, there are some cases that you are going to see a lot of money and then you are using the minimum loss size. All of a sudden, the market will just retrace and still take you out. So in this way, the power of compounding helps you to know your strategy more. That means you are going to be more of a person that is most times on the sprint looking for setups than someone that is swinging, that just enter the trade and just shut down everything is off to do some other things. But in as much as you can stick to that compounding, 1 to 3, 1 to 4, 1 to 5, if you can stick to it, you are even going to get better with trading. You are going to get better with trading. And the funny thing about it is that your early days are going to be the time that you're going to be doing the hard work. When you now compare your account to a very big equity, you are going to have a lot of freedom. Believe me, you're going to have a lot of freedom. Okay, Mr. Charles, Mr. Work for the
Okay, sorry.
bosses.
Let me just add to what
All
you
right, sir. All
just
right,
said.
sir.
That question is a very, very important question. But before I go, I'm seeing Coach Musti, Dr. Staffarian here.
Oh,
I'm not sure
welcome,
if
sir.
it is his ad account, but it just sneaked in. Shout
Welcome,
out.
sir. Shout out to Maskash. Maskash. I really appreciate you,
He's an,
sir.
he's an amazing, amazing person. Okay, let me go straight to that question. Um, just like AY said, in addition to what he has said, you need to understand yourself. Like I always tell people, when you want to start the journey of trading, the first thing you need is not a strategy. The first thing you need is not capital. The first thing you need is not a mentor. The first thing you need is to know why you want to trade. After knowing why you want to trade, okay, then you now study your personality. What do you study in your personality? You study your risk appetite. You study how you respond to profits. You study how you respond to losses. This will inform the kind of trade that you take. For example, if you are someone that you don't have large appetite for risk, swinging will probably be the best trading pattern for you. Why? It will keep you long enough in the market. And when you are long enough in the market, it will take time for you to hit stops when you are swinging than when you want to do a short scalp of maybe M3, M5, M10, M15. Within 15 minutes, your trade can hit stop loss if you are trading, if you want to do a short scalp. But if you are trading maybe the big time frame, of course, your risk to reward cannot be the same thing as trading M3 or M5. But at least when you do that over time, it has a lot of implication on your psychology. The staying power to stay on trade would have been built. And with that, you can now graduate into catching short moves. I see people that they are not yet grounded in swings. They don't really know what they are doing and they want to be catching short moves. Short moves, you can get stopped out 5 times and only one will go your way. And that one that will go your way will pay times 10 or 20 of what you've lost. But is your psychology strong enough to keep on trading after having like 7 to 8 losses? Can you still place, if you hit stop loss 7 times consistently, are you strong enough to place the 8th trade? Are you strong enough to place the 9th trade? Are you strong enough to place the 10th trade? So who are you? It defines how you actually trade. And that's like the foundation of everything. It's not even trade itself. Everything you do in life, who you are, determines how you go about it. So that's just what I would like to add to it. Thank you.
Thank you so much. Thanks so much, Mr. Havilah. Thanks so much. So that's it. Mr. Charles said, good evening, sir. Well, for the bosses, sir, please, how were you able to balance yourself up when it looked like you might not meet the time schedule for pro-firm evaluation phase. This Mr. Ayodeji, perhaps you should help us with this Mr. Charles question because I've not taken any pro-firm accounts before, challenges I've not taken before, so I
Okay,
do
what's
not
this question?
know. So the question says that, good evening, sir. Well, for the bosses, sir, please, how were you able to balance yourself up when it looked like you might not meet the time schedule for the pro-firm evaluation phase? How do you manage anxiety?
Okay, see, the truth of the matter is that trading a prop firm is not easy. Trading a prop firm account is not easy. It's not the same thing as trading your personal account. The pressure from the prop firm company alone is enough to destabilize you. And if you've not mastered lower time frame entries, it may be difficult for you to really do well within the span of time that you've been given. For example, MFF gives, I think 30, the first evaluation, 30 days for, is it 8% now? Yes, for 8%. And when you pass that, you move to the next one. With that's within 30 days. And then you move to the second evaluation stage, where you are expected to make 5% within 60 days. Now, how do you trade? How do you want to calculate your trade to meet up with that time frame? Number one, based on experience, you don't trade all assets. You've got to focus on few assets, maximum of 3. I prefer 1 or 2, but if you want to stretch yourself, maximum of 3. Number 2, do not risk more than 0.5% of the account for every trade you take. Do not risk more than 0.5% to 3, break even, irrespective of how sweet your setup is. If market likes, it should come back and close you out. It's fine. At least you secured 1 to 3. 1 to 3 is 1.5% of the account. You've backed 1.5% of the account. That one will not leave your account again, except you eat stop loss. And if you eat stop loss, you're only taking 0.5% from it. Prop firm account is about accumulation and compounding of your profits. It's about accumulation and compounding of your profits. If you eat 3 stops in a day, forget about trading that day, go and rest. In fact, you will do well as a daily trader with a prop firm account holder than maybe a monthly trader. Or you need to master lower time frame entries. That's just the basic thing. Now, if you are risking 0.5% of your account for every trade, you will be mentally balanced to leave your trade to run for 1 to 3. We are not saying 1 to 5. We're not saying 1 to 10. 1 to 3. After 1 to 3, you are good. I mean, you're fine. You are good and fine. Okay, a lady sent me. I don't even know if she's on this call. Let me read what my conversation with her. So she came to meet me that she wants to fund she wants to, buy MFF accounts, 5K. A lady, this is a challenge to guys here, a lady. And then after funding, she came back and then I said, I'm waiting to congratulate her. Then I asked her a very, very important question. What is your trading principle for the account? You can't just start the prop firm account without having a trading principle for it. And then I asked her, and then she gave me intelligent answers. Let me read it. She said she's risking 0.25% per trade. I was suggesting 0.5%, but she's risking 0.25%. Why? That is her risk appetite. That's how much she can lose without having heart attack. She's risking 0.25% per trade. Maximum loss in a day is 0.75. Once she eats 0.75 minus 0.75 to minus 1%, she's done. for the day. He said break even and partials at 1 to 3. A very wise decision. PS to trade EU and GU or AU, meaning EU and GU. If any setup comes from AU, she picks it, meaning she's correlating them, the three assets, with DXY. Can you see that intelligent principle? He said any stop loss that goes beyond 25 pips, she's not taking the trade, meaning she's aiming for sniper entries. Snipers. I think I took a trade for on GU this morning, courtesy Dr. Stafferian. He just sent me the setup. When he sent me setup, I don't check. I just enter. And then I got the stop loss of, I think, 6 pips. You can imagine if you are risking 0.5% of your account and then your stop loss is 6 pips. If the trade moves just in a little, maybe few candles in your direction, you are done with your 1 to 3. You break even. Let it do whatever it wants to do. So all these are important things to take note of when you want to go into Profem account management. Most people go into Profem account without having a proper understanding of how to trade. That's why they blow accounts. Profem is hard if you don't understand yourself and the chemistry you have with your trading. But Profem is easy when you understand yourself and your chemistry to trading. You are not under pressure. You don't compare yourself with another person. No, you don't compare yourself. You have your target, you have your destiny, you have your future. The person you are trying to copy, you don't even know if the result of the person is correct. You don't know if the result of the person is double. You don't know if the result of the person is Photoshop, but you are allowing that to have influence on you. So know yourself. Focus is your personal deal, not with anybody. The business is between you, your trading account, and your Profem. And then when you imbibe all these things, you will definitely pass the account. It may take time, but at least you won't lose the account. And meanwhile, for MFF, once you are in profit after 30 days, you can request for extension another 2 weeks. And I was told that even after that 2 weeks, if you are in profits again, you can extend for another 2 weeks again. So that's almost a month. That's how many days? 60 days. 2 months, 60 days to get 8% of whatever account you are getting. Come on, that's quite easy if you understand risk management. So I think that answers your question. Thank you.
Thank you very much, sir. So Mr. TAA said, do you pick out assets to trade weekly? If yes, which day of the week do you journal down the assets to look at for an opportunity for the week? Okay. Yes, mostly I trade, for me personally, as an individual, I trade boom and crash mostly. And every Sunday, I do my top-down analysis on all boom and crash assets. So now, I will not narrow it down to 2 assets or 3 assets per week. I think I still have I will send a picture of where I did one last time that I was at home. I did one. I'm going to send it so that you can see what I was looking at and how I wanted to take the trade. When you are doing your weekly analysis, you have to be doing it weekly. You are looking at for the best setup. There are some trades that are high probability trade setup. There are some that are low probability trade setup. So now, after I have done all my top-down analysis, I want to look at the trades that are of high probability trade setups. These are the trades I'm going to focus on for that week. Nothing more, nothing less. I just know that only just one entry is enough for me to be okay. Only one entry is enough. So I hope that's answered your question. And when you are doing your top-down analysis, like I said, you need to have a book. Like everything you are seeing on each time frame, write it down. You have to think about it. I'm seeing this on the monthly, I'm seeing this on the weekly, I'm seeing this on the H4, I'm seeing this on the 1 hour. You have to pen everything down. So when you are done penning them down, when you are done journaling it down, that's when you now look at, okay, which one is aligned the more? Which one is in line with your strategy? Which one are you more comfortable to look out for in that week? That is how you look out for a trade to take in a week. That's how I do my own. That is how I do my own. Okay, so when you place a trade, how do someone the anxiety of not checking trades all the time, and what time frame should that look at the trade to know when to close at 1 to 3? Okay, Mr. Tega, before you even enter a trade, you need to know two major points in a trade. That is where your TP is and where your stop loss is. Where you are going to place your TP and where you are going to place your stop loss, even before you enter a trade. These two things are very, very important. So if you want to now, instead, if you are the type that you are very, very addicted to watching your screen, I will advise that to start narrowing it down to like 2 hours interval. 4 hours interval. This is how you start getting your mind off pressing your phone every time, checking your phone every time. And then in the middle of it, try and get, maybe you want to read a book, try and get a book, read a book. If it's a movie, watch a movie. If it's a new skill that you are learning, go and focus on that new skill. So you just set an alarm. Like now, I used to do mine now, I think 4 hours interval most times now. I will set my alarm at 1 p.m. in the afternoon, 5 p.m. in the evening, 9 p.m. in the night. So once this alarm signs signal me, I know that okay, it's time for me to what? To look at my chart. It's time for me to look at where is my trade, where is it? Is there a break or structure that can just tell me that okay, maybe the market wants to reverse back in my direction? Is it a trade that maybe it has taken stop loss? Is it a trade that maybe is still going my profits? I put time to it. I do not want to be watching the whole tick. I'm not a slave to screen. I don't want to be watching the whole tick of the whole move of how the market is moving up and down. I do not have, you won't have time for other things. You won't develop in some other areas of your life. So you just have to schedule yourself that okay, within so maybe 2 hours interval, 3 hours interval, 4 hours interval. This is when I just want to look at my screen maybe for just like 15 minutes to know where my trade is and to know is there a possibility that this trade can come and hit me out, and then you are shut it down again, you are on to something else. So about time frame to look out for your trade to close at 1 to 3. There's no time frame for you to look at the 1 to 3. In as much as you are taking your trades, immediately you already know where your stop loss is, and whatever you are risking, you want to make times 3 of it. If you are risking $5, you want to make minimum act of that trade that you want to make at first is 1 to 3. So anything you now see on that 1 to 3 is like profits. And maybe you are the type that breaks even at maybe 1 to 2.5 or whatever. Is up to you. Is your individual decisions to take. But first, very, 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 very important is that stick with your 1 to 3 first. 1 to 3. After your 1 to 3, then you are good. There's no specific time frame for you to look for your 1 to 3. Whatever you are risking, aim for times 3 of that amount that you are risking. That's just it. That's it. Okay, okay, all right, sir. So any other question? Any other question? Any other question, family? Okay, so if we are all good and we have gained something what we have discussed today, can you please drop 111s in the chats? All right, keep it coming, keep it coming. All right, so family, I want you to do something for me. I want you to do something for me. Go back to the chat, to the Telegram group and type thank you, Boss Ayodeji and Boss Maskash. Thank you, thank you, thank you. You're welcome, God's time. You're welcome, you're welcome. So type thank you, boss LDG, and thank you for giving us this platform for us to use. I
Please,
don't know.
let's wish AY happy birthday in advance. And for those that can extend the hand of gift to him, please do not hesitate to do that. You can sow seed into his life. It's obvious that he has gained a lot of experience in this market, and you can actually leverage on it. It's not everything.
When are we coming to eat the party rice? Where is it happening? I beg.
Thank you,
Ayo.
boss. Thank you, boss. Thank you, boss. I don't know yet too. I don't know. Family is dragging me. My own base are dragging me. I don't know yet. I don't know yet. So my birthday is going to come up on the 8th of September. That's like in 2 days' time on Thursday. So thank you very much.
Same day as my younger brother's birthday. Happy birthday in
Wow.
advance.
Wow. My happy birthday in advance to you. All right. Okay, Mr. TAA. Yeah, I'm going to send a copy of between now and tomorrow evening. I'll try and come up with a trading journal, like a copy. I do my trading journal for the week, what I look at for and all the rest. I'm going to send a copy. Maybe I might even do one for the sake of the whole group generally. I don't know. Anyone shall. All right. All right. So thank you very much. Thank you very much for hopping on. I will send the recording as soon as possible. I'll send the recording as soon as possible. All right. So we all have a night rest. Bye.